Hi everyone, welcome back to my commerce class. Today I have taken one more problem on royalty accounts. So the previous video we have learned the preparation of royalty analytical table, and today we are going to prepare journal entries along with the royalty table. Here the problem is Jyoti Mining Company entered into an agreement, lease agreement on 2012, 1st April 2012. And these are the terms and conditions. Okay, royalty is rupees 20 per ton of coal raised. Minimum rent is 50,000 for all the years. The recovery of short workings is first 3 years. And they are given the output of 5 years. That's 1213, 2000 tons. And 2250, 3000, 3800 and 5000 tons. All this given in tons. Okay. And we have to prepare the journal entries in the books of Jyoti Mining Company. Okay, if possible, if time permits, we'll work out on the ledger accounts. Look at the solution. Here, this is the royalty analytical table. As usual, we have to make these columns: your output, royalty, minimum rent, short working, surplus, recovery of short workings, and also royalty payable. These are the common columns that we have to maintain. So this is the production given period 2012 13, 13 14, 14 15, 15 16 and 16 17. So as per the problem, the production what they are given, that is entered here 2000, 2250, 3000, 3800 and 5000 as given in the problem, and it is rupees 20 per ton. So multiply the 2000 with rupees 20,000, so that you will get 40,000. Here it is 45,000. 3000 into 20, 60,000. 3800 into 20, 76,000. 5000 into 20, 1 lakh. Okay. So this is a minimum rent as per the agreement. So same 50,000 to be taken for all the years. 50,000, 50,000. It's remain constant. So now we have to find out the short workings. So as I said, when the royalty is less than the minimum rent, we are going to get a minus value. Whenever there is a minus value, that is to be written in the short workings column. So the definition of short workings is excess of minimum rent over the actual royalty. That's a 10,000. Okay. And again in the second year, 45,000, here it is 50,000. There is a minus value of 5,000, will treat it as short workings. And if the royalty is more than the minimum rent, we call it as a surplus and to be recorded in the surplus column. Third year, there is a 10,000 surplus. And in the fourth year, there is a surplus of 16,000. And in the fifth year, there is a surplus of 50,000. So we have short workings for the first 2 years. And for the next 3 years, we have surplus. But as per the agreement, we are supposed to recover the short workings in the first 3 years. In the first 3 years, whatever the surplus we are going to get out of that, this short workings to be adjusted. So what is the total short workings we have? We have 15,000. And in the third year, the surplus is only 10,000. Of course, in the fourth year, there is a 16,000, and in the fifth year, there is a 50,000. But we are not supposed to use this fund. Okay, so we are not going to use this fund because the condition says you are going to recover in the first 3 years of surplus. Okay, that's 10,000. Out of 15,000, you are going to use 10,000. Remaining 5,000 to be treated as loss. Okay, this loss to be transferred to profit and loss account later. Okay, this is a loss. You are not supposed to adjust this 5,000 for the surplus of the subsequent years. As per the condition, you are supposed to do it only by third year. Okay, it's royalty payable in all these years. Whenever there is a short workings, you are supposed to pay equal to the minimum rent. Okay, that's 50,000. Here also 50,000. Here there is a surplus 10,000, but this 10,000 is adjusted to short working. So 60,000 minus 10,000. Okay, 60,000 minus 10,000. So you are going 50,000. Here there is a surplus, but still you are not utilized this. So 76,000 completely paid as royalty. Here 1 lakh again completely paid as 1 lakh. Okay, the surplus is not utilized for adjusting the short workings. Okay, clear about this? So because royalty table is important, whatever you are written in the short workings column or in the recovery column or in the royalty table, that is to be considered for preparation of journal entries. I hope that you are clear about the table. Okay, so now we'll move to the journal entries which is prepared based on this royalty table. Okay, so look at this journal entries. So for each year we are going to get 3 entries because we are doing this journal entries without minimum rent. We have 2 types of journal entries. One is with minimum rent account, another one is without minimum rent account. So first problem, we are doing it without minimum rent account. That means we are not opening minimum rent account in the journal entries. Okay. First year we have a short working. So journal entry comes like this: royalty account debtor, short workings account debtor to landlord account. The narration is being the royalty due. So due entry is taken here. Okay, and after that we have to make the payment whatever the due is there to the landlord. That's a landlord account debtor to bank account, 50,000. So this is the 50,000 or the payment what you are going to do, that is done based on the royalty payable. Last column what we have written now, that is to be considered. And profit and loss account is the royalty what is actually extracted, what is actual royalty is there, that is to be treated as a loss expenditure and to be recorded in the profit and loss account. That is 40,000. Okay, so look at here the table. This is the royalty amount what you have written. This amount to be transferred to profit and loss account. It is for the second year. Again royalty account data, short workings account data to landlord account. This is the 45,000, 5,000 and 50,000. Landlord account to bank account, that is transferred, and whatever the royalty amount is there, that is to be transferred to profit and loss account. The third entry, profit and loss account debtor to royalty. The first column, actual royalty what we have written, that is to be taken here. Even though 10,000 is adjusted, not to be considered 50,000. The first column amount, royalty amount 60,000 to be transferred to profit and loss account. Okay, and in the next year, that's in the year of 15-16. So what we have, a royalty account debtor to landlord account, 76,000 because the amount is not adjusted to short workings account. When we are not adjusting to the short workings account, the account will not appear in the journal entry. The amount whatever that is there in the royalty column completely payable to landlord. So this is the due entry and you are going to make the same payment. So landlord account debtor to bank account, 76,000. And same amount to be transferred to profit and loss account also. So profit and loss account debtor to royalty account. Next year 2016-17, the royalty production is 1 lakh as per the royalty column. That is the due which is to be payable to landlord. Royalty account debtor to landlord account and landlord account debtor to bank account, 1 lakh paid. And the same to be transferred to profit and loss account, profit and loss account debtor to 1 lakh. I think this is the entries what we have to do. Okay, as per the table. So this is a table. Whatever the amount is recorded here, the same amount to be considered for the preparation of journal entries. I hope it is clear for you. One look at here, when there is a short workings, you are going to debit the short workings. Second year also there is a short workings you have debited, and in the third year it's the recovery. When there is a recovery, you are going to credit the short workings account, and when there is no adjustment related to short workings, you are not going to open the short workings account. Whatever the royalty is there, directly payable to the landlord. In the fourth year as well as in the fifth year, there is no short workings amount. Royalty column, whatever the amount is there, completely paid to the landlords. Okay, likewise you have to make a journal entries. Based on these journal entries, you are supposed to prepare royalty account, landlord account, short workings account, profit and loss account. Let us prepare the royalty account. Okay, we need to prepare royalty account, landlord account, short workings account, and also profit and loss account. So here I have taken the royalty account and short workings account. Okay. Whatever the journal entries we have done, the posting to be done to the concerned accounts, respective accounts. So, the first entry, as usual, we know royalty account data, short workings account data to landlord. So, royalty account has been debited with the landlord account with the amount due 40,000. And finally, that has been transferred to P&L account. So, profit and loss account data to royalty, where royalty account is credited. So, that is done here. Okay, so landlord account is debited and profit and loss account is credited. So total becomes 40,000. Likewise, each year it is going to tally because the amount of royalty expenditure will be transferred to profit and loss account at the end of the year. The second year royalty amount due is 45,000 and which is transferred to profit and loss account. Okay, like landlord account data and by profit and loss account. And in the third year, so actually for the landlord we are giving only 50,000, even though royalty amount is 60, we are giving 50,000. The 10,000 is adjusted to short workings account. So the entry comes like here, royalty account data to landlord account to short workings account. So that is debited here. And the total amount of 60,000 actual royalty expenditure transferred to profit and loss account by P&L account. Total 60,000. And in the fourth and fifth year, no adjustment to related to short workings to landlord account 76,000 by profit and loss account 76,000. In the final year also, last year also, to landlord account 1 lakh and by profit and loss account 1 lakh. So that ends the royalty account. Okay, it's very simple. So amount to due, whatever that is to be given to landlord account, and the expenditure which is transferred to profit and loss account. Okay, and then the short workings account is prepared. Again, the journal entries, royalty account data, short workings account data to landlord. So to landlord account 10,000. The first year short workings account is, amount is taken here, and it is not adjusted to any account. So by balance carried down 10,000. The same amount is brought on for the next year 10,000, and the second year short working is 5,000 taken here. So by balance carried on, the total of 15,000 is shown here. Okay, the total of 15,000 brought on for the third year 15,000, and in the third year there was a surplus of 10,000 as per the royalty table. That short workings is adjusted up. Okay, that means recovery of short workings. Okay, recovery of short workings 10,000 and 5,000 the money which is not recovered. So the money which is not recovered treated as loss. Okay, that is transferred to profit and loss account 5,000. By that, short working account closes. That means short workings account is prepared only for the 3 years. In this, as per this table, we have short workings due and recovery only for 3 years. Okay, by that ends, and we have to prepare landlord account and also profit and loss account, whatever that we have written in the journal entries to be posted to landlord account and profit and loss account. Okay, so in the coming video we'll work out few more problems